Well, as you can see, we got a nice green candle, a nice green trend precognition signal, and Bitcoin recovering from yesterday's dip. Good morning, guys. It's Keith Allen, and I want to tell you, yesterday was a big day, but we are not in the clear yet. In fact, something very telling right here as price is trying to reclaim the 21-day moving average. That's this green line right here. So let's back up and see how we got here. Yesterday, of course, the FOMC announcement, no surprise there. Nobody was expecting to see a hike or a cut yesterday, I don't think. But really the question was, would the Fed stay on target for three cuts through the end of the year, 25 basis points each one, for a total of 75 basis points by the end of the year? Not only did they validate that, Powell did in his news conference, which gave the market some confidence, but also the longer term projections a year out and a second year out were revised downward significantly. So what this indicates is that they would be cutting more aggressively. They're forecasting that they would cut more aggressively in 2025. So that's something to keep an eye on. These forecasts tend to change a lot like the weather, right? They're not right all the time. In fact, they're probably wrong more often than not. However, this is what the market is reacting to. This longer-term projection rate, slightly higher, not much of a concern at this point. This is the nearer term, and we're talking 1 year and 2 years out. So that's what the market reacted to yesterday. The bigger news, the biggest news was that Powell thinks, and the FOMC for that matter, the Board of Governors, all think that we're still at this point on pace to start cutting here. Potentially, they didn't give us a date, but it seems like the consensus is that we could see this probably around June start to begin. If not, maybe we see a cut per quarter. A lot of those different things were floated out there. I think that the pricing, these cuts are already baked into price. Now it's just a matter of when it happens, right? And when it happens will be a catalyst. Some potential other catalysts would be the economic numbers that happen between now and then, right? So things like a hot jobless report would indicate that the Fed needs to cut sooner than later. And of course, unemployment as well will be coming up later. We look to those reports each and every month, right? So we also have housing is something that was raised yesterday in terms of interest rates being high, meaning that there are fewer home sales and fewer mortgage applications. So those are all things. That's the needle that the Fed is trying to thread here. So at the moment, we're seeing an uptick in the 4-week average of jobless claims, but the initial jobless claims, meaning new jobless claims for the week, are down a bit. So a bit, maybe a bit of a nothing burger. The market at the moment seems to be trying to work its way back into that level that I just showed you here, right? We have this 21 moving average. Let me increase this a little bit and make it easier for you to see. Right? So trying to fight its way back in here. And the fact that we're below it at this point, the fact that price didn't just shoot back up here and go after this prior 2021 top, prior all-time high, is telling to me, right? Because we had all these rejections up here, which was part of the breakdown. And the fact that we don't have just a clean run up is proof to me that this isn't going to necessarily be just, the V-shaped boom. We're right back above all-time high, and we're in price discovery. So I want to zoom out a bit, and we're going to look at the order book here in a second to get there. But if we zoom out, and let me clean things up a little bit. You got the picture on these trend precognition signals. Let me get them out of the way. I'm looking at our moving averages, right? So we have our cup and handle here. I just removed the handle so that we could see this a little bit better. Trying to declutter the chart a little bit for you guys. So we challenged this prior all-time high, rejected, made it up, but wick down below. These wicks below are signs of weakness in the move, in my opinion, right? So we broke down from there, and now we're trying to work our way back up to this. Just because we had a positive news day yesterday from the Fed does not mean that we are right ripping back into a new all-time high. It also does not mean that we are safe from a potential larger correction. Now, I want to clarify, because yesterday people started, hammering me saying I'm a bear, which I'm not. I am a neutral. Listen, I'm a neutral. I try to be as neutral as I can and show you what could potentially happen in both directions on these analysis, right? That's what I'm here for. And yes, I'm long. And as soon as I saw that news yesterday on the on those longer term plans, as soon as I saw that's the wrong page. As soon as I saw these numbers come out, I bought, because I knew that the market was going to move, and it did, obviously, right? So at this point, I want us to see it. I want to see us go back up, obviously, and I think that eventually we will. But I'm not naive enough to think that we're in the clear from a potential bigger move. Okay, so I'm playing what's in front of me. I'm trading what's in front of me. I'm long at this point, but I also have bids stacked at key levels down, because I think that there is a possibility it will happen. And why do I think there's a possibility that could happen? Because historically we see that it has happened time and time again, even the weeks before the halving, even weeks after the halving, even in a bull run, it can happen. So for me, and the way that I trade, and listen, this isn't advice. This is my opinion. This is the way I trade, and I trade very conservatively. The way I trade, I take profits along the way so that I can recycle those profits into these dips, right? That's what I want to do. That's how I want to optimize my position. Now, if you're not an active trader and you're a longer-term investor, it is hard to beat. It is really difficult to beat buy and hold in this environment. Look at this. I mean, you just have to be precise. And I haven't beat buy and hold with my trading in this realm. It's just a different risk profile, right? So I have coin that I do hold, that I don't trade, and I have a stack that I trade with. And so that's part of my risk management strategies. You do what works for you. But if you think that we are only from here, you're being naive. I would just caution you against doing that, and I would caution you against over-leveraging yourself so that you don't get in a position where you get wrecked if price does indeed take that deeper correction. So our targets haven't really changed from yesterday at all, because we're still in the same price range. But as we move up, okay, so I'm still looking for a possible opportunity to pick up coin lower. Maybe it's at that 58 to 60 level, which would be a 20% move, right? So basically, I'm always on the charts marking what would be a 20% move, which gets us down to that 58 to 60 level. What would be a 30% move, which gets us to that 52K level, and what would be a 40% move, which gets us to that 45K level, an area that we had so much confluence down here. Does not mean that we are going to go there. It just means that I'm prepared in case we do, okay? So you trade that how you want to. The longer we spend up here, the less likely we are to go down here. And as price moves up, right? So let's say we start working our way above the prior all-time high. Let's say we get up there and we consolidate up here a little bit, and we work our way trying to get back into this lifetime channel, right? Let me show you that so that you have some perspective. Trying to climb our way back into this lifetime channel. And in my opinion, this is really where price discovery happens, right? When we can, if price can get back up here, this is all uncharted territory. At the moment, this is going to act as resistance all the way up. And what if we chopped up here on the underside of this channel, right? We're all still making money. We're still making all-time highs, but there's a ceiling, so to speak, on where we could go. This is going to be strong resistance all the way up until we get in here. Once we do, we have what I consider to be really, truly exploratory price discovery. Until then, this is the glass ceiling, if you will, right? We all want to see it get broken. It could happen quickly. It could take a long time. It may never happen at all, okay? So just keep that in mind, right? So that's kind of what I'm looking at in the near term here, as we kind of navigate through what we're seeing. I've shown you what the potential is in terms of those drawdowns. Excuse me. So you're prepared for that, and of course, we also have that ETF narrative. And there's I read a lot of garbage on Twitter. I try to really ignore as much of it as I can, to be honest with you. Okay, and people are just hammering Grayscale, right? They're hammering Grayscale for all these, for suppressing price and that they're dumping. Grayscale isn't dumping. Their customers are selling. And the reason that their customers are selling and the reason that they're selling so much more than everybody else is because, number one, look at the volume difference on what they own versus everybody else, right? And what they had, right? They were up there in terms of, in the neighborhood of 36 million Bitcoin, okay? And now they've sold a lot of that has been sold. And the reason that it's happening from Grayscale so much and so regularly versus the others, two reasons. One is the fact that Grayscale had this Bitcoin trust that they started, I think, back in 2013. Okay, we're talking double-digit Bitcoin prices back in those days, right? Maybe triple-digit. Okay, whatever it was low, way freaking low, and those people had a lockup period that was only an over-the-counter trade, and then the FTX crash happened, and all of those coins got locked. All of those assets were locked up, right? That wasn't coins; it was assets relative to Bitcoin that were locked up. People could not trade. Once the ETF was greenlit, they converted all of the assets in that Grayscale Bitcoin Trust into the Grayscale ETF, and the redemptions began flowing, and they began flowing hard and fast. Okay. Now, this was people cashing out because many of them were buying when Bitcoin was triple digit. If you date it back to 2013, look at how low price was back in those days, right? People were buying, double-digit Bitcoin, triple-digit Bitcoin. Okay, so that's just a hell of a trade for anybody that held that long, right? That's absolutely amazing, right? So huge profits to be made. Of course, the other factor is this 1.5% fee. Now, maybe we've seen some people some investors rotate out of this and into some of these. That's entirely possible. And likely to a degree, but this was a design by Grayscale. They knew exactly what they were doing. They knew that these people were going to be redeeming, and they wanted to cash in on that, which they have. And at this point, they've made upwards of 180 million in revenue from these redemptions. So Grayscale knows exactly what they're doing. I think their CEO, Michael Sonnenschein, was interviewed a couple days ago, and he said, "Oh yes, prices, fees will gradually come down." Well, guess what? He's just waiting for the flows to quell, because he's making money on every single one of them, and he's happy to do it. Right? They got some big bills to pay over there at their company, with some legal issues from their parent company after the FTX debacle. So they're trying to generate as much cash flow as they can, and they're doing it through these redemptions. Now, this is a little bit different right here. The Invesco Group, one of the others that's selling a little bit, right, from time to time, probably with more regularity than any of the others. We don't see any outflows coming from BlackRock or Fidelity or Bitwise or Cathie Wood's, ARK Invest, right? So I'm speculating. We saw a little bit yesterday, 10 million in outflows from them yesterday, and maybe that's some repositioning. I mean, if you consider that these guys came in back in January, right? So it was what, January 10th, I think, that the ETFs were approved. And where does that put us? Where does that put that trade from January 10th to now? Let's just scope that out a little bit, right? This is like a 50% move. Okay, here was the ETF approval. We had a big correction, right? So we could take it from anywhere you want to say, right? But basically they all bought somewhere between here and here, right? Let's just go right up the middle. Let's say they bought right at that glorious 44K level that we're looking at, right here on the moving average. And where are we now? That's a 52% move already. Okay. So, after the pullback, it actually went up 68%. So, 50% plus in 2 months. I don't have any problem with profit taking there. I mean, why not recycle that? Maybe they think there's a dip coming too, and they want to invest, and they want to, reinvest that way. So just a couple things to look at. Now let's take a look at the order book and see how things are looking in fire charts. As you can see, we had this big concentration of bid liquidity down here at that 60K level. A lot of it was pulled, a little bit was moved, and we now see laddering into place. What concerns me a little bit here is the thinner areas, right? Obviously, we have resistance holding us down in this level at the moment. Maybe when the market opens here in a half hour or so, we'll see maybe a change in tide. Maybe we'll see some of the inflows pick up. The outflows have been dominating here for the past 2 or 3 days. But see these gaps right here? It's not a gap really, but it's an area of thinner liquidity. Price can move through that quite easily, right? So let's drill down to the daily time frame, and you can see there's not a lot holding price up here. We have one small buy wall, sub $8 million right here at the 65.5 level, which could certainly hold. But it could break very, very easily, right? We've seen some major moves through thick liquidity this week, so really anything can happen. All of these darker areas, and I'm gonna highlight them here for you, so it's easier to see, right? Keying in on the bright spots is where liquidity is. Liquidity dampens volatility, right? So perhaps this could hold as a guardrail through the weekend, or perhaps it gets eaten and we go back down into this level. Quite possible. Just as easy as it is to move up through these areas, right? And go back above the all-time high. I think it's going to be more of a challenge than a lot of people may think. But again, in this environment, I'm trading what's in front of me, right? There's what I'd like to happen, which never really matters because the market doesn't give a shit what I want, right? Or what you want. And it's looking to shake out and wreck as many people as possible. So be prepared for that. I'm trading what's in front of me. Fundamentally, the future for Bitcoin is as strong as it's ever been. And if you don't have the appetite or the skills to trade this actively, then just sit on your hands. That's a strategy, right? And if it's a long-term investment, you're probably going to fare pretty well here in the long term. But if you're a trader like I am, you're looking for opportunities to optimize your positioning and make money every day. And so just know that we have some potential volatility here because we don't have solid, right? When it's solid like this, this will dampen volatility. Doesn't mean we can't go through there, but it does mean we're not going to go through it like a hot knife through butter. This, on the other hand, is an easy slice. So we could work our way back up to retest that all-time high very, very easily, but we could even easier, as you can see, go potentially lower. As for those deep targets, like in the 40s that I looked at the moment, there's no liquidity down there, which tells me there's no sentiment for price to go there at the moment. Doesn't mean we can't grind down. And if we break this level down here, then obviously we're going to start to see some liquidity move into place down there. That hasn't happened at this point. So, to me, I think that this is kind of the local, quote unquote, local bottom down here. Maybe we hit it yesterday. Wasn't quite the 20% move that we're all, looking for. I think it was like 18%. So we're in the range, certainly, that it could qualify as, as that shallow correction. But just know that this is easy to get through. This is not so easy to get through. And this is really going to be tough to get through. Okay. To get back up here into that new all-time high territory, we're going to have to start printing full candle bodies above this prior high at 69K and grind our way up into this. Consolidation is not the worst thing that can happen, right? In fact, consolidation is the strongest thing that can happen because it gives us foundation for bigger moves, all right? So that's why I like this, and that's why I'd be very happy to see it in this range, in this range between, 60 and 69, and I'd be happy to see it in this 69, in this level above 69 to validate an RS flip, a resistance support flip. We haven't validated this RS flip because it, quite frankly, invalidated at this point. So at the moment, still fighting for this 21-day moving average. Keep an eye on it, right? That's what we're going to be looking for, and we're just going to trade what's in front of us. Hope you're finding this analysis helpful. If you do, please, I really appreciate the feedback you guys are sharing with me. Please keep it up. Those comments make a difference. I mean, they not only make me feel good, it helps boost the channel, and really that's what I need to happen for me to keep doing these every single day. I read every one of your comments, and I respond to each and every one of them, so please keep them coming. I really appreciate it. And if you have suggestions of things that you'd like to see in the analysis, by all means, hit me up, and I'll do my best to accommodate, all right? So with that, I hope everybody has a fantastic day, and as always, trade safe, my friends.